morning and welcome to another profitable 30 minutes on television. The program is Capital Market and I'm John McQuarrie. Well, let's begin with a review of some of the equities market outside the shore of Nigeria. We start first with the world's biggest economy, the United States, which closed Friday's trading session positive across the board as reports of a new oral treatment for COVID-19 boosted investor sentiment as well as the shares of companies tied to economic recovery. The Dow Jones Industrial Average climbed by 1.43%. That's over the S&P 500 was up by about 1.2%, while the Nasdaq Composite snapped a 5-day losing streak as it gained 0.8%. Now, over to the European equities markets now, which closed lower on Friday as economic data showed that Eurozone inflation jumped to a 13-year high. The UK's FTSE 100 index dropped by 0.84%. Germany's DAX was down 0.68%, while France's CAC 40 index slipped 0.04%. Meanwhile, shares in Asia-Pacific slipped in Friday's trading, with Japanese markets among the region's biggest losers. The Nikkei 225 fell by 2.13%, while the Topix index shed 2.16%. Markets in mainland China closed for the Golden Week holiday, from which start on the 1st to the 7th of October, while markets in Hong Kong were also closed for public holiday. Well, coming back home now, we'll take a look at some of the events that happened during the week. But first of all, let's introduce our guest in the studio for the evening. We have Mr. Abel Ezekiel, an investment and portfolio analyst, joining us once again on this episode of Capital Market. Good to have you, Mr. Abel. Good evening.
Thank you. It's nice to have you. To be here this evening. Thank you.
Okay. So we have some things that happened over the week, during the week, and we'd like for you to react. One of them is that the Corporate Affairs Commission has completed the incorporation of the Nigerian National Petroleum Company, the Nnpc Limited. Now, that's the way we're going to have to call it from now on, is the Nnpc Limited. And that's in line with the provisions of the Petroleum Industry Act, the PIA, which was signed into law by the President on the 16th of August. Now, according to the Registrar General of CAC, Mr. Garba Abubakar, the registration was completed the same day after fulfilling all requirements set for its incorporation. With this move, Nnpc Limited will now be required to pay taxes and dividends to its shareholders. Let's get Mr. Ezekiel's reaction to this. I think we've been waiting for this for a very long time.
It is really long overdue.
Exactly.
You understand? It is from, like you have rightly pointed out, based on your preambles, that it is the offshoot from the PIA as required by law. Over the years, Nnpc have always been seen as a father figure, operating with a lot of, at a point in time, even their finances were not even being made public, or their finances are not being made public, and all those things. And most of the times that their books, you may not know how it is being prepared. But now this is a kind of a break from that kind of situation now. So moving forward, it's now being seen as a public, for now, it's a limited company. And I'm sure as time goes on, that's for the medium to long term, definitely the shares of this company will be made public for Nigeria to invest in them. And that is where sanity will now prevail in the oil industry vis-a-vis the operation over the years. I think it's the right thing in the right direction.
Yeah, so apart from giving Nigerians the opportunity to invest, and also get part of the profit from the oil and gas industry of the country, it should also boost the NGX.
Very well.
The capitalization. It should do a whole lot, because that's what happened in Aramco.
Exactly. Definitely, it's going to add to the capitalization as well, because, and again, it's going to bring liquidity to the system as well. Because that has been the kind of the question people have been asking, whereby companies that are doing very well, that are well capitalized and all those things, they are not really coming to the bourse, to the exchange. So based on this direction that we have seen now, the liquidity of the market will be boosted, and that will impact possibly in the market as we move on. And a lot of things will come into play as it stands. And remember, it's almost like, in a way, the demutualization of NSC, as it were, where you now have it, instead of it being under limited by guarantee. It's now being seen as a publicly limited liability company paying dividend to shareholder and all those, all of them, and people can now invest in the company as it were, as it's before now. You can't do that, but now that is the direction which will enable Nigeria to invest in the company. So I think it's a very good step in the right direction, and definitely we are seeing a lot of vibrancy in the capital market or in the stock market as time goes on.
How do you gauge potential investor sentiment towards the stocks of Nnpc? Do you think people will be skeptical because let's watch and see how it goes first? Or do you think people will dive into it and just,
Very well. You know, investors like to very well look at what the system terrain, because nobody wants to be caught napping as it's well. But I think with time, by the time some institutional investor will come and invest, okay, remember, this Nnpc as well, they said they wanted to even acquire 20% of that gold refinery and all those things, all those stuff. So based on that, investors will watch, but with a reasonable time, by the time they see their report being sent, their account being sent as at when due, and things have been done in the proper way, sanity has not, returned to the system, definitely investor will take, because the essence of investing is where it can generate income, can make returns for investment. I think it will really be a worthwhile thing for investors to take position in the company.
So all investors are watching the space to see what happens in the report.
Exactly.
Well, let's move on to some company news now. Pan-African Financial Institution, Ecobank Nigeria, has appointed Mrs. Bola Adeshola as the new chairman of the bank's board. In a statement released, the bank mentioned that her appointment follows the expiration of the tenure of the outgoing chairman, Mr. John Abo. Prior to her new appointment, Mrs. Abimbola was the Managing Director and Chief Executive Officer for Standard Chartered Nigeria and West Africa for 8 years, with oversight on the bank's West African subsidiaries. A former chairperson of the board of Standard Chartered Bank Mauritius and a director at Standard Chartered Ghana. Meanwhile, Ecobank Nigeria says it has also appointed 3 non-executive directors to its board. I guess it's a new dawn for Ecobank, and we expect some innovations and some things to attract investors and even customers.
Exactly. This is a very experienced hands. This is a kind of a round peg in a round hole. Somebody who was at Standard Charter in charge of West Africa, and Ecobank take its offshoots from, in fact, at a point in time, they were dominant account, at the initial it was ECOWAS Bank before it became a Pan-African bank, So it is a very kind of experienced hand. Somebody, I'm sure she had been with First Bank and ED before moved to Standard Chartered, 8 years. From there, it's now the chairman of Ecobank. I think it's a capable hand, and we definitely the input or her kind of weight of experience is going to impact positively on the results as we speak. As time goes on Ecobank moving forward. It's a very good kind of appointment, as it were.
Exactly. We're certainly looking forward to that. Meanwhile, conversations are ongoing around the adoption of technology to advance the operations of the Nigerian capital market to create a platform for local and global investors. According to the Director General of Securities and Exchange Commission, Mr. Lamido Yuguda, the adoption of technology will require businesses to restructure their business models as it opens up new opportunities, as well as a change in the regulatory framework. Made this known during the Technovation Conference, which was hosted during the week. Let's hear what he said during that conference.
For regulators globally, keeping up with the rapid pace of change in technology-led markets is challenging. And the rapid pace of innovation has also challenged existing regulatory frameworks, approaches, and tools. As fintech spans both finance and technology sectors, there is additional uncertainty around whether and how to regulate these firms. However, regulators have responded with their innovation initiatives to ensure that fintech strengthens their regulatory policy objectives and mitigates potential negative impacts. The Commission, like other regulators around the world, is prepared to advance with this evolving pace. It has put mechanisms in place to understand these new innovations built the required capacity, and has deployed strategies to address them. The Commission's innovation objective, which is hinged on investor protection, market deepening, and providing solutions to existing problems, will guide market regulations and aid its interaction with investors seeking legitimacy and relevance.
All right, Mr. Ezike, we've been talking about, adopting technology and then the way things are done now, which is virtually into the capital markets, to at least make it attractive to the young generation, the younger generation.
Yes, it's really long overdue. What actually brought this kind of innovation to bear was this issue of COVID. Last year, I think around March last year, NSC initiated a program called business continuity, whereby they now created a platform. They brought they call it X data portal, whereby you can trade from the house, from home, because most of activity in capital market over the years has been, you must be there in person. You have to relocate from your house to registrars.
Do a lot of paper, physically,
paperwork,
filling paper, sending,
honestly.
signing.
So that, to an extent, had actually taken a chunk of a lot of people from the market. And even in another area, I mean, another thing which I have seen is, for instance, is an investor who have relocated out of the country is cut off from assessing his or her investment, as it were. But with the new, it's more or less being regarded as digital economy. This is practically bringing digital economy into capital market. You can now do most of your activities online. For instance, now, we talked about dividends that remain unclaimed. Imagine somebody who is in Ikotepene, registrars of the company is in Lagos here, and he has a dividend of 10,000 to claim. He has to travel from Ikotepene
and spend how much to get to Lagos?
So definitely, the individual will just look at it. It's not worthwhile. Why should I spend? Even within Lagos here, there are some things that sometimes you just look at how much you are going to spend to claim that benefit. But with the way it is, now there are a lot of activities that are going on now, which has enhanced or deepen the capital market. This is actually the good way forward. And most of the registrars are keen to it. Most of the top government are keen to it. You can trade from your home, comfort of your home. You understand?
Well, we do hope they will accelerate this process, because as it is, it's not that popular yet. It hasn't gone round. And a lot of Nigerians still stay in Nigeria and buy, the stocks from the United States, and because it's just so easy. You get on your phone, you get on your laptop. Meanwhile, we are not able to do that with the Nigerian
But that is the direction the NSC with NGS, with the collaboration with SEC, that is the direction they are going now. Deepening the market, allow the fintech to actually take, in as much as like the DG of SEC has mentioned, investor protection mechanism are put in place. Definitely, you will have a system whereby a lot of innovation will be brought into this market. A lot of people who have sidelined the market, who have left the market, they will come into it, and the market become more efficient and effective. You now find out that at the end of the day, to be able to achieve a result, you spend less money, and the interface moving around, it becomes a kind of a global. The market becomes so global, as it were, on your fingertip.
Yeah, but the SEC and the NGX also have a lot of work to do to convince Nigerians that the system is trustworthy, it is safe, their data and their money is safe. Because that's also another thing when you hear that the government has started something. First of all, there's this skepticism that, will this not go the other way? So there's a lot of work to be done.
There is. But as it stands now, if you look at the requirement for you to carry out a kind of a transaction, these days that NIN and BVN, account and link and the rest of them, definitely some of those fears have been mitigated, have been brought to minimal level. So therefore, there's no need for someone, because if you sell your security, for instance, and incidentally your account will be credited directly. Unlike before that, you have to go to the stockbroking firm, go and fill form, go and read a letter of authority, go and assign mandate, and the rest of them. With simple kind of access to a platform, you can do your trading, you can place your order, your order can be executed. So for me, it's really,
it's a new dawn.
It's a new dawn in the market, and it's the right way or the right direction to go.
All right. Well, we'll just take a break now. We'll take a short break. We have another on the other side of this conversation. We're going to the third quarter has ended. We'll do a review of that, and of course, outlook for the coming week and the coming month. So stay with us. It's Capital Markets on Channels Television. Welcome back. You're still watching Capital Markets on Channels Television. Well, the domestic stock market ended last week's trading, the last week of September, with massive gains in just 2 trading sessions, which shortly before closing for Nigeria's 61st independence, a good way to celebrate the independence. The market's benchmark index soared by 3.23% this week and back above the 40,000 level, and that's the first time since February this year, while the total value of listed regained about 720 billion naira within the month, which had initially been dominated by continued sell pressure. And I know the banking sector suffered a lot of this. In sectoral performance, all the major counters ended the week in the green, except the insurance sector, which dipped by 7.58% due to profit-taking on some of its key components. Meanwhile, University Press led a pack of 33 gainers, up 20.59%. AXA Mansard is #1 among 22 losers, with 29.82% drop on its share price, while the trio of Transco Hotel, Honeywell Flowers, and FBN Holdings were the major contributors to a high turnover of 2.18 billion volume of shares, worth over 16.18 billion naira, which were traded during the week. Mr. Ezekiel, a good way to celebrate the independence, because before that we had a lot of sell pressure, especially in the banking sector. I was wondering what happened.
Well, before the event that took place last week, the banking sector have been dropping. We have GT holding company have been dropping because they are second quarter earnings actually fell. Within that banking sector, the bank that actually did very was about Zenith Bank, that net about 106 billion, followed by Access Bank that got about about 96 billion profit after tax, followed by GT holding company that got about 79 billion as in profit after tax. But definitely, most of these earnings maybe did not make investors' expectation, and most of them too, they send their interim, results. I mean, it's a dividend. Zenith Bank paid 30 kobo, GT Bank paid 30 kobo, Access paid 30 kobo, UBA paid 20 kobo, which were marked within the period. So essentially, it is as a result of a kind of maybe investors' expectation. Maybe the expectation was not met. Okay. That what led to. Even though as of last week, towards the end of last week, all these 3 companies actually they gained. Access Bank, GTO, the company, and Zenith Bank, which led the market to go into, to recover as of last week Friday, before this public, what's it called, independent 30th of September. Now, something happened. There was a result. If you look at, let me first of all talk about this insurance that you mentioned, and you mentioned that Azamanza dropped 29.3% in its share price. They did the reconstruction of his shares. Their 36 billion outstanding shares was reconstructed to 9 billion. So the price from 3 naira to 3 kobo, which that was the price from the reconstructed to 323 kobo, and the outstanding share dropped to 9 billion. That was what led to the price dropping, because investors have now seen that that price high, as it were, 3 naira 23 kobo. So it contributed to the massive drop we saw in insurance, and which led to insurance index dropping. Now, coming to this week now, something very, very interesting. He entered the market. Dangote Cement released second quarter result.
Yeah.
Very, very massive.
Yes, they really lifted the market.
It lifted the market. Their earnings, but from 477 billion to 690 billion. You understand? Then profit before tax, but went as high as about almost 300 billion. Yeah. 292 billion.
Profit, they were up 14.3% for the week.
In fact, the only what really hit that result was the provision for tax, which went up to about 144 from 6 billion to about 86 billion. As in provision. But at the end of the day, profit after tax drop. It still come to as much as about to about 181 or around 191 billion. And that actually drove the market. And you know the weight of Dangote Cement in the market. Dangote Cement has about 70 billion units outstanding shares. At that price, definitely it will really propel the market. And that is what led to the market dropping, as in going on green. High. But at the end of the day, we have year-to-date loss of minus 0.1.
Yeah, reduction in the loss.
You understand?
So how do you think this bullish sentiment will be sustained?
Well,
capital
market is a wave length of a thing. It doesn't follow a straight line. You understand? At a particular point, when the market sustains a bullish trend, profit taker will enter, and that session will be curtailed. So it's not a kind of a 100-meter dash.
You cannot just stay
cannot continue like that.
Else, I think it will become boring and it will not attract a lot of investors.
Yeah, exactly. Exactly. And Dangote Cement, it has actually this is a 52-week high. As of last year, as of December, it did share reconstruction of 40.5 million shares, which they bought, which was so at 243. So now it's a very good kind of
okay, so we're almost out of time now, but let's look at the quarter. We just talked about the week. Let's look at the third quarter.
Third quarter, yes.
Generally, yes. How would you assess the quarter?
No, as in the market, number one is the market for this third quarter, which has just ended. It was really disappointing to an extent. Compared with what happened at this time of last year. This time of last year, the market was really on here. You remember last year, the market gained as much as 50%. You understand?
But wasn't that because we're just, coming out of the lockdown and...
Coming out, yeah, it wasn't really... If you remember, at that time, CBN policy actually boosted the market. You understand? This fixed income and all these bond market rates were dropped. Treasury bill were... CBN,
so the steady
so there was a lot of liquidity that moved to the market as of last year.
So the steady decision of the Nnpc, hasn't that pushed the market?
It has
the last Nnpc.
It has, to an extent, not really impacted the market. And again, there are some other kind of, I would say that's more or like a side kind of hit in the market. All this cryptocurrency and all those stuff that are trading on. If you remember,
are you saying the e-naira has a negative impact on the market?
For now, it's not. The modality is not yet. People are still watching it. It's more or less a digital currency, which is different from your physical cash you have in your pocket. It's still kind of a emerging scenario which people are still watching. So one cannot really situate that. But I can tell you, moving forward, third quarter earnings will start hitting the market anytime from this month of October, because we just end up 31st. So, and most of these companies, their close period have started being, Nigeria really declared soon, Fidelity Bank declared, even Guinea declared. So definitely, by the time those results or numbers come into the market, and if they are positive, that will assist the market to move in positive direction.
So what's your forecast for equities for this week?
It will sell...
the new week we're about to start tomorrow.
Based on what happened last week, I think there will be some kind of a tempo, but at a point, it will still come to the whereby investors will still be watching and waiting for the top quarter earnings to come before they will take a decisive decisions, because nobody wants to be caught napping or burn his fingers. So
third quarter earnings are now in focus.
That's
a determining factor.
Yes, those are really post-leading requirements, and definitely you must invest with numbers. You must invest with understanding of what you are doing. You cannot invest in the dark.
Or out of sentiment.
You understand? It is those numbers that will determine where you go, how you put in your money, decision you take. If it's favorable, fine. If it's not favorable, realign your investment. So they are very, very key. That's why NSE doesn't joke.
NGX
does not joke.
We've gotten so used to NSE.
Exactly. They don't joke with all those quarterly report of your financials. They don't joke with that. Very, very important. They don't joke with it.
All right. Thank you so much, Mr. Abel Ezekiel, investment and portfolio analyst, for sharing your time with us this evening. We really appreciate your thoughts and a review of the market. Just before we go now, we'll give you a forecast of what you should expect from the capital market in the coming week. Analysts expect yields at the Treasury bills market to trend higher this coming week as investors react to the recent increases in auction stop rates at the primary markets. At the same time, traders and analysts maintain expectations of lower average yields at the secondary bond market in the medium term, as investors are likely to continue cherry-picking attractive instruments across the yield curve in the face of reduced supply by the Debt Management Office. For the equities market, where we had Mr. Ezekiel's forecast, but analysts expect a mixed performance. I guess it's almost like he has said on the local bourse in the coming week, and that's because of profit-taking activities as well as bargain hunting as savvy investors. However, corporate actions from listed companies and other macroeconomic developments are likely to impact investors' decision. Of course, one of them would be the earnings results, which investors are expecting. Traders also say that expect investors to monitor the movement of yields in the fixed income market, and that is our forecast for the coming week. We'll see how true that comes by this time next week. Thank you so much for being a part of Capital Market. We believe it was worth your while. Let's do it again next week. I'm John Mekwa.